And then yesterday, Morgan Stanley had this great chart looking at the spread between what they're calling Google exposed infrastructure and OpenAI exposed infrastructure. This would include things like SoftBank, CoreWeave, AMD, Oracle. You can see what's happened. It's not just about Google stock and say NVIDIA stock.
Although the NVIDIA bulls are coming out in defense of NVIDIA big time. It's not just NVIDIA defending itself, as we reported yesterday against Michael Burry. Bank of America trading note says, we see scaling laws are holding, which is driving the need for more GPUs and TPUs. In other words, rising tide lifts all boats. That's sort of the bull case here if you want to step in and buy it. They say the AI arms race is bigger and real and more intense than some thought just a few weeks ago. Anthropic, OpenAI, Gemini, big real models, large product roadmaps, and just a ton of spending. That narrative hasn't necessarily changed. In fact, it's only increased in terms of the spending and the size, though the market has become more discerning about it.
People will point out even Google's on back order with NVIDIA. It's not as though they're not using any NVIDIA chips. Of course they are. They're just using fewer. And again, while I've been talking about TPUs over these last few weeks, it's really been in terms of the cost advantage versus OpenAI and the fact that given they don't have to actually spend as much with NVIDIA, they conceivably are in a place where a cost per token per dollar per watt is better than OpenAI in terms of just processing everybody's queries. But didn't know necessarily the story would move on to this idea of them potentially selling TPUs to others and replacing NVIDIA in their chip stack.
Potentially.
Yeah, that was yesterday's story.
Meantime, the China demand, if you're looking for incremental buyers, this information piece that Sarah mentioned would sort of throw some cold water on that. If, in fact, the Chinese, as the information argues, are really breaking free of NVIDIA. By the way, NVIDIA was the #1 Dow stock for a long time. It's down to #6, been replaced by Caterpillar, IBM, J&J, Goldman, all ahead now of NVIDIA for the year among Dow names.
How about Google? So today we're on watch, right, for the $4 trillion market cap.
We were on watch yesterday.
We were on watch yesterday.
And on Monday, too.
But then it closed not there yesterday, so now we're on watch today.
Who knows? Maybe we'll be on watch Friday also.
It has to trade above 331. 341.48 to have the $4 trillion market cap, because it has the kind of complicated multiple class structure. I think the Wall Street Journal put it nicely as far as the new love for Alphabet, which we've been covering, obviously. Yes. But the way they put it is the level of AI vertical integration here that the others can't quite match. Right? They've got this great new Gemini 3 product, but they trained its own frontier AI model on its own networks using its own TPU chips. And that sort of whole... Yeah,
the vertical integration. Ginger Bose has actually done a good job explaining that as well in her reports, I think, of late also. And
it sort of makes it a combo, right, of the OpenAI and Microsoft and NVIDIA all in one. And that's been attractive.
I want to talk about Meta. They're buying chips from Google. Google is one of your top picks, and you say they are a real threat to NVIDIA. Make your case.
Yeah, they are a real threat to NVIDIA, but I think it's kind of funny, Stuart, that everybody out there thinks just because Google has the ability to create a competitive product to NVIDIA that this is going to be a big bear thesis for NVIDIA. What we believe, Stuart, is that Google has an incredible technology capability from the chips all the way to the software and data. And this is why the company's been recognized and its market cap is nearly doubled or about doubled this year. But at the same time, I also think the entire bear thesis that this means NVIDIA is going to lose all the business is wrong. There's $1 trillion of expected investment in AI infrastructure over the next couple of years and $1 trillion a year by the end of the decade. NVIDIA is going to grow at an incredibly fast rate, and Google is going to supply some of the chips because here's the thing. We are all hands on deck right now. Google just put out Gemini 3. They had to actually peel back Gemini 3 and put Gemini 2.5 back out because it was over throttled all the compute. There's not enough compute. So the bottom line is Google needs all the chips it can make, Meta needs all the chips it can make, and NVIDIA also will continue to sell and grow at an incredible pace.
Where do you think the best gain is going to come? Google or NVIDIA? If I put money into Google now and NVIDIA now, where's my best gain within 6 months?
That's a great question. I was a huge Google bull. I think their valuation is finally appreciated. I think NVIDIA, the pullback, there's been so much FUD in the market, whether it's the Burry short thesis, which we think is mostly wrong, whether it's been the China FUD that's come out that they won't be able to sell and therefore no one's going to want the chips. every week it seems like there's another hit piece on NVIDIA, but all the company does is grow. I've said this to you on the show before. We think they can do over $300 billion in revenue, net income of about 50% next year. Their growth ratio is incredible, and right now they're trading at only 26 times forward. Yeah. And unless there is fraud, and we don't believe there is, it's a great value right now.
NVIDIA, that's at a nasty dip too.
Same thing. We bought NVIDIA yesterday on the dip. I'm glad we did. It's looking good today. This is one of the problems that I saw, Stuart, is here's a leadership name. Here is the most valuable company on the planet that was being sorely beaten up. It's also a retail darling, and that added some consternation to the whole AI narrative. That seems to be now arrested by Google and what they're doing, and NVIDIA is getting caught up in that, and I think now it can continue to go higher. But let's not forget, NVIDIA is incredibly profitable.
Yeah. China's first homegrown GPU company, More Threads, now readying a public debut in Shanghai, founded by some former NVIDIA employees who are now looking to take on the U.S. chip giant. Our Deirdre Bosa has some details in today's Tech Check. Hey, Dee.
Hey, good morning, Carl. So investors, while they're gaming out the Google TPU threat to NVIDIA, the real blind spot may be on the other side of the world. China, yes, it's building its own GPU stack, and More Threads IPO, it's 4,100 times oversubscribed. That's the next data point. Now, of course, this sits inside of a larger trend. Beijing went from hoarding NVIDIA chips to blocking some of its biggest tech companies from using them in new data centers, instead forcing them to shift budget and engineers to domestic chips. Now, for American investors, it's a clean read that China isn't just a lost market for NVIDIA. It is becoming a competing GPU ecosystem with state-backed capital and now retail money building out a parallel AI chip stack. Now, More Threads is the headline today, but it sits alongside other names like Huawei and Cambricon and rising startups like Byron and Medax. They're all building different pieces of a system designed to make the country less dependent on American chips. Now, to be sure, there's still a long way to go. China's industry, it's incredibly fragmented. It is subsidy dependent, and they, as of now, lag American chips by generations. The More Threads prospectus, it details how hard this is. Sales are still small and losses have piled into the billions. Yet NVIDIA itself is warning investors to pay attention, saying that export controls are pushing Chinese companies to adopt domestic accelerators. And even if those aren't as performative today, they're good enough to start replacing some U.S. systems inside China. So put another way, guys, China is building an AI stack that is accessible and good enough. And good enough scales. If most of the world can't afford NVIDIA-level systems, they could turn to Chinese ones. So for NVIDIA, this may be a two-front challenge. Google TPUs at home, China stack abroad.
I was going to say, but do they have TPUs? Which I guess is a question that we would only ask this week. Deirdre, what's the latest on whether NVIDIA can sell in China those chips?
The last that I heard is that it's under consideration and that they may be able to sell more powerful chips than the H20s. It's kind of remarkable what China was already able to do with the H20s, right? That led to DeepSeek. But since DeepSeek, there's been a bunch of other really good models like Alibaba's Qwen, like Kimi K2 from Moonshot AI, a Chinese startup. So, what can NVIDIA do? They can keep pushing Washington to allow them to sell their chips. But if it takes too long, it may be too little too late. The Chinese are already being forced in some ways by Beijing to work on domestic accelerators, which I want to get this straight, Sarah and Carl. They are no means, not even close to as powerful as what we're seeing out of NVIDIA or AMD, but they may just be good enough. And the Chinese are finding ways to sort of cluster them all together to create something powerful enough to continue their AI rise.
That is two AI giants moving in relatively different directions recently. Alphabet, Google's parent, and NVIDIA are now on pace for their widest monthly divergence since February of 2024. In other words, in just under 2 years' time. So will this trend continue? Will Alphabet continue to soar, or will NVIDIA kind of get most of its mojo back and maybe catch up? We're joined all hour by our friend Sarat Sethi, managing partner of DCLA, CNBC contributor, and for today, a guest host. Sarat, great to have you.
Thank you for having me.
Are you as surprised as some have been at this recent outperformance by Alphabet?
So I wouldn't say surprised, but I think the key thing to focus on is Gemini is working, and now because of Gemini, the horse race is now in Google's favor.
Gemini is their AI agent, for lack of a better term.
Exactly, and that was competing with ChatGPT. And if you remember when ChatGPT came out, people said, "Whoa, wait a second! 90% of Google's revenue is advertising. That's going to hurt." Now you come out with people saying, "Hey, this is a little bit better." So I think it's a horse race, Brian, and I think there's going to be enough demand, and there's going to be enough for both of them, if not more, to survive. But in today's momentum-driven market, Google's come out ahead, and then you got the news that Meta might maybe be using their chips. So a combination of those two, Google's added over $1 trillion of market value just this quarter. And I think the naysayers of Google are now kind of not there and probably got some shorts covered and now some longs going to the game.
I mean, it has really been an outperformer, and we're not taking anything away from NVIDIA. I guess the bigger macro question for most of our audience, Sarat, is this a Muhammad Ali, Mike Tyson moment where they don't fight against each other and they each can win in different arenas? Or is this more of a Sonny Liston Muhammad Ali where there's going to be a winner?
I think it's going to be in the former, because what you also, and NVIDIA came out a couple of nights ago and said, hey, we congratulate Google on their chips.
Which I thought was a little weird. But.
Yeah, which was kind of interesting, right? However, our chips are first generation, right? So it's really who's got the technology, who's going to be using it for what. And if you're talking about computing power faster, there are going to be different demands, different needs for different computing power. So right now, I think it's the former, but NVIDIA was so far ahead, we'll have to see when the next kind of chips come out, who's going to be buying them, or are you going to be buying kind of, do you want the Ferrari or do you want the Nissan, right? That's going to be the question.
Is NVIDIA the Nissan? Because NVIDIA has printed money for investors the last number of years. Only lately has it been relatively weaker than Alphabet, but you know NVIDIA has been a giant
It's been a huge giant.
I mean, you owned it for 5 years.
It's our top.
You have a solid gold yacht.
Our top 5 holdings have NVIDIA and Google in them.
Okay.
So if you think about it, am I selling either one? No. Am I trimming it? Yes, if it becomes overexposure. But I think, it was natural for NVIDIA to give back some of it. It was such a leader in this. Google's catching up. But I do think if the two of them, what they're doing are good core holdings for the next couple of years.
Okay, so they're still top 5 holdings for you.
Yep.
You're trimming a little bit of NVIDIA.
Only because if it becomes outsized.
Because it became too concentrated in your portfolio.
Exactly.
So the headline is not Sarat Sethi selling NVIDIA because you don't like it. It just became it was almost too successful, and it filled up that candy jar a little too much.
Exactly. And any stock that does that, when you have a diversified portfolio and you're looking to risk manage, you have to say, hey, I got to be careful, because you don't want to fall in love with the stock. You have to have risk discipline. In the same way that when you have a sell discipline, you also have to say if things are too big.
All right, so we know the hysteria story of the week, right? And I think the press got this one wrong. This AI battle is reshaping the market right now, right, in real time. But it's Google. It's not Google versus NVIDIA. Apparently, it's Google versus OpenAI. Tell you what I'm talking about here. This is the Google crew right here. Google exposed infrastructure. So whether Broadcom, LITE, CLS, these are the names that are all benefited. They've done extraordinarily well. Now, this whole trade was working together just until recently, right, when everyone got bearish on NVIDIA, but that wasn't the problem. It's OpenAI. A lot of people question, $1 trillion, whatever it is, they make a deal every other day. Oracle's paid a price for it. Microsoft's paid a price for it. And Advanced Micro's paid a price for it. CoreWeave, and of course, NVIDIA's paid a price for it. So there's no doubt at this very moment, the Google team is winning this thing. The question, though, is, does there have to be a Waterloo for both entities? I mean, is this thing so big that there can be a win-win situation for investors? No one better to ask than Defiance ETF CEO, CIO Sylvia Jablonski. All right, so let's start. Team Google, right? If you're in these stocks right now, you are doing extraordinarily well. They go up almost every single day. I've been in this bad boy, ups and downs, and had a huge session yesterday. Lights had a huge session. What do you feel about this? Because I think the only irony here is that many of them look expensive right now.
Yeah, absolutely. And I think, you kind of introed this well. Is there room for both of them? There is room for both of them. The reason that all of these companies are winning are because AI is the biggest phenomenon of our generation. Whether we're talking about sensors or an electric grid or, production in the aerospace and automotive and OpenAI and cloud and hardware and software, all of these companies are involved in that big infrastructure play for AI. And Team Google is a multi-trillion-dollar toucher of AI, whether it's ads, YouTube, Android, whatever it may be. So everyone here could be a winner.
Ironically, you could put NVIDIA on this list, right? They just put out a statement saying, Google buys a lot of our chips. I think the thing is with these TPUs versus GPUs, the GPUs have to be used, right? I mean, isn't that the point that TPUs, Google made them for themselves and they could do some lifting, but they don't do the heavy lifting that GPUs do, right?
Well, right. And if you look at the spending of the hyperscalers, we're talking about a 30 to 50% increase in spend on GPUs, which is NVIDIA. NVIDIA, to me, has right now, or for now, the monopoly on chips. They are the leader of AI and AI infrastructure. You need GPUs to train these large models. You need GPUs for quantum computing. You essentially need GPUs for all this to take off, and nobody is anywhere near NVIDIA.
And I want to show folks this chart, great chart from Blue Kurtic, because essentially since ChatGPT, right, there have been seven times NVIDIA has come down 10% or more, 7 times. The last 6 times it formed a distinctive pattern, which is the blue line. So if that pattern holds up, guess what, folks? This might be your time to buy the stock if you missed it over and over and over again. Are you a buyer still?
I think NVIDIA is hard not to buy on the dips. It's one of these companies, again, I feel like they have the monopoly on AI and AI infrastructure GPUs. So when that stock falls, for every client out there that has FOMO, these are your chances to dollar cost average into your portfolio and hang on when it falls back. So.
All right, I hope you're all doing great today. Today, the information is reporting that Chinese regulators have blocked ByteDance from using NVIDIA chips in new data centers. I'm always hesitant to believe anything the information reports having to do with NVIDIA rumors given their track record, but I'm bringing it to your attention so that you're aware of it. Even if this story is true, it doesn't really change anything for NVIDIA as they are already restricted from selling in China. The good news is that NVIDIA has removed all China revenue from their forecasts, and NVIDIA's business is accelerating even without having any exposure to China. Now, I want to revisit the NVIDIA GPU and Google TPU discussion in case you've missed recent videos, because that appears to be what's on the forefront of many investors' minds right now. I don't view the success of Gemini 3 or the success of Google's TPUs as being detrimental to NVIDIA anytime soon. I'm also not bearish on Google at all. There's plenty of room in this market for multiple companies to succeed as there is such strong demand. Let me ask you a few questions. Is the world still compute constrained? It absolutely is. Will NVIDIA sell whatever they can produce in 2026? They most likely will. Will NVIDIA sell whatever they can produce in 2027? They most likely will. The reality is that companies today, including companies like Meta, simply cannot get enough compute. The world is severely compute constrained in the face of very strong AI demand. Let me ask you another question. Will the total addressable market grow over the next 5 years? The answer to that question is almost certainly yes. And so if the total addressable market is going to grow larger and the world continues to be compute constrained, then there's plenty of room in this market for companies like NVIDIA, AMD, Broadcom, and others to all succeed as there is such strong demand. I'll briefly revisit the topic of GPUs versus custom ASICs in case someone isn't familiar with what's going on here. To give an analogy, you could think of an NVIDIA GPU as a Swiss Army knife. It's very versatile across a wide range of tasks, while at the same time, it is not the absolute best option for certain tasks. On the other hand, you could think of a custom ASIC, such as Google's TPU, like a scalpel. It's not versatile, but it is highly efficient at the specific workloads it has been optimized for. And notice that there are use cases for both. As I've said in the past, Google is a great example of a company that uses both their own custom ASICs and NVIDIA's latest systems. Even though Google uses their own TPUs for their internal workloads, they also continue to invest heavily in NVIDIA's latest systems to then offer that capacity to their cloud customers. NVIDIA systems are a great option for cloud providers because they are versatile across a wide range of tasks, allowing cloud service providers to serve a wide variety of customers. All of that to say that I don't view the success of Google's Gemini 3 or the potential for Meta to start using Google TPUs as a major deal breaker for NVIDIA. There is plenty of room in this market for multiple companies to succeed, and that will most likely be the case for some time. Given all of the criticism of NVIDIA and the AI ecosystem this week from well-known short sellers, I want to remind you that while there may be some similarities between this AI revolution and the dot-com era, there are also major fundamental differences in multiple key areas. First, the largest spenders in this AI revolution have the deepest corporate balance sheets on the planet. Second, the largest spenders in this AI revolution are very profitable, and they're primarily funding their AI investments by means of their own cash flows. That was not the case during the dot-com bubble. Also, I don't view the hyperscalers using debt as anything to be concerned about right now, because they're simply using some debt to speed up their AI build-out. The question to ask is, can these companies afford to pay their debt? The answer to that question is absolutely yes, and so it's nothing to be concerned about right now. A third difference between this AI revolution and the dot-com bubble is that the largest spenders in this AI revolution are not aimlessly investing in AI infrastructure infrastructure in the hopes of eventually finding a use for it. They already have multiple uses for it, and they're investing heavily in an attempt to meet extremely strong demand from their paying customers. There's real demand here. In the most recent earnings season, Microsoft told us they had nearly $400 billion in backlog, and Amazon told us they had $200 billion in backlog at the end of Q3 with multiple large unannounced deals on top of that. Those are orders on the books that these companies have to deliver to their paying customers. And fourth, new use case development and mass public adoption of the technology is going to happen much faster than it did during the early days of the internet, because the internet is already here, making new use case development and mass adoption of the technology immediately possible. We don't have to wait 10 years for it to happen. It's happening right now. This drastically reduces the risks of long digestion periods and overbuilds of capacity like what we saw in the early days of the internet. And that brings me to my final point on this topic. Gavin Baker made a great point recently at an event hosted by Andreessen Horowitz, where he said that during the peak of the dot-com bubble, 97% of the fiber that had been laid was dark. Today, there are no dark GPUs. Every GPU is spoken for as the world is severely compute constrained in the face of very strong AI demand. And that is one of the key reasons why I think Burry's analysis regarding GPU depreciation is incorrect. I disagree with the premise that the hyperscalers are understating depreciation in order to artificially boost earnings. Rather, I think the hyperscalers have simply come to the realization that the useful life of the hardware is longer than what they originally anticipated due to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world is severely compute constrained in the face of extremely strong AI demand. Since the world is compute constrained, developers will use whatever compute they can get their hands on, including hardware that under normal circumstances would be considered older generation. That extends the useful life of the hardware. There's a reason why NVIDIA, A100s from 6 years ago, are still running at full utilization today. There's a reason why CoreWeave is able to rent out H100 capacity at 95% of the original rental price. It's because the world simply cannot get enough compute to meet the demand, and thereby the useful life of the hardware is extended. This is not a bubble. This is insatiable demand, and this is fundamentally different from the dot-com bubble. Think about this. During the dot-com bubble, we had a surplus of supply and a shortage of demand. Today, we have a shortage of supply in the face of extremely strong demand. It's the complete opposite. Could that change one day if supply eventually catches up to demand and the world is no longer compute constrained? Sure, but I honestly think we are at least a few years away from something like that happening if it happens at all. Jensen appears to agree with this time frame, given his recent commentary. And looking beyond that time frame, we have to consider that new use cases will be developed, and those new use cases will increase the need for compute even further. NVIDIA has multiple very large long-term growth opportunities in front of them, including quantum GPU, supercomputing, and physical AI. I think we will see many new use cases emerge as a result of physical AI. I also think there's a very real possibility that NVIDIA's physical AI business may eventually be larger than their current data center business. There's a reason why I keep talking about NVIDIA's physical AI business, and NVIDIA CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention, but I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.